Welcome to Asianomics. I'm your host, Alex. Singapore is a great place for businesses to grow or move to because of its strategic location, top-notch infrastructure, and friendly environment. However, there's a hidden dark side we need to talk about. Today, we're going to discuss the issue of money laundering in Singapore, which has arisen from the government's helpful policies. We'll dive into the lesser-known aspects of Singapore's business scene and examine the money laundering problem. Singapore is an excellent place for businesses that want to expand or move to the Asia-Pacific region. Its strategic location, top-notch infrastructure, and business-friendly environment make it a great choice. As a global financial center and trading hub, Singapore offers easy access to the fast-growing markets of Southeast Asia and beyond. It also has a diverse, highly skilled workforce focused on education and skills development, perfect for businesses looking for talented employees. One reason Singapore stands out is its special location along important trade and shipping routes, such as the sea route between India and China. This makes it easier for Singapore to support businesses in the region. The country is also known for its fantastic transportation system, including the award-winning Changi Airport and advanced port facilities. Singapore's strong infrastructure includes advanced telecommunications and transportation networks, cutting-edge logistics and supply chain systems, and modern offices and commercial spaces. The country is also dedicated to sustainability, investing heavily in green technology and renewable energy, making it an appealing option for environmentally responsible businesses. Singapore's government offers many incentives and benefits to attract businesses, such as funding, mentorship opportunities, tax breaks, and research grants. However, these favorable policies have led to some issues, particularly concerning money laundering. The One Malaysia Development Berhad, 1MDB scandal, is a massive and intricate financial fraud that shook the world, involving the theft of billions of dollars from a Malaysian state-owned investment fund. Launched in 2009, 1MDB was meant to boost Malaysia's economy and attract investment, but it quickly became a breeding ground for corruption, with top officials and their allies pocketing billions of dollars. The scandal implicated a wide array of people, including former Malaysian Prime Minister Najib Razak, high-ranking government officials, and global financial institutions like Goldman Sachs. However, the 1MDB scandal didn't stop at Malaysia's borders. It spread across the globe, with money from 1MDB laundered through a maze of shell companies in various countries, including Singapore. Singapore's position as a major financial hub in Southeast Asia made it one of the key locations for the 1MDB scandal. As a center for international banking and finance, Singapore offered a complex and well-regulated environment perfect for facilitating intricate financial transactions. Plus, its closeness to Malaysia made it easy for illicit funds to be transferred across the border. Singapore's strict bank secrecy laws and reputation for financial stability also made it an ideal location for hiding dirty money. Goldman Sachs played a vital role in the 1MDB scandal, particularly through the issuance of 3 bonds worth a total of $6.5 billion between 2012 and 2013. These bonds were supposed to fund 1MDB's various investment projects, but it's estimated that about $2.7 billion from these bonds was misused for personal enrichment and bribes. Investigations revealed that a large chunk of the bond proceeds was siphoned off for personal gain. Some of the funds were allegedly laundered through an intricate network of shell companies and financial institutions in Singapore. Goldman Sachs was accused of helping to set up the shell companies used to launder the corruption proceeds and not performing proper due diligence on the transactions. The bank was also blamed for deliberately misleading investors about the true purpose of the bond offerings and the use of the proceeds, which were meant for economic development projects in Malaysia. In response to the 1MDB scandal, the Singaporean government sprang into action, launching an investigation in 2015 and creating a multi-agency task force. This team consisted of the Commercial Affairs Department of the Singapore Police Force, KD, the Monetary Authority of Singapore, MAS, and the Attorney General's Chambers, AGC. The task force zeroed in on several individuals and entities involved in money laundering activities connected to 1MDB in Singapore. One significant move in 2016 saw the MAS ordering the closure of BSI Bank in Singapore due to severe violations of anti-money laundering regulations concerning 1MDB. Yak Yu Chi, the bank's former wealth planner, was found guilty and received an 18-week jail sentence, along with a fine of 24,000 Singapore dollar for money laundering offenses linked to 1MDB. More actions followed in 2017 as Swiss bank Falcon Private Bank faced a fine of 4.3 million Singapore dollar, and Singaporean bank DBS was fined $1 million Singapore dollar. Both banks had breached anti-money laundering regulations in their dealings with 1MDB. The task force also charged several individuals involved in money laundering activities connected to 1MDB in Singapore. One of them, former BSI banker Yvonne Sia Yu Fung, was sentenced to 2 weeks in jail and a fine of 10,000 Singapore dollar in 2017. In the wake of the 1MDB scandal, the Singaporean government took measures to bolster its regulatory frameworks and prevent similar events from happening in the future. The MAS implemented new anti-money laundering regulations, including more stringent due diligence requirements for financial institutions. They also established a dedicated financial investigation division to probe money laundering and other financial crimes. Moreover, the MAS has ramped up its supervisory oversight of financial institutions, adopting a more proactive approach to identify and address potential risks. The government has also strengthened its cooperation with international partners, including through the establishment of the ASEAN-Singapore Cybersecurity Center of Excellence, which facilitates sharing information and best practices in fighting financial crime. Singapore's government has implemented several policies and incentives that make it an attractive destination for businesses looking to expand or relocate. For instance, Singapore's tax regime is one of the most competitive in the world, with a corporate tax rate of 17% and various tax incentives, such as the Productivity and Innovation Credit Scheme, which encourages businesses to invest in research and development. Additionally, the government has implemented various programs to support entrepreneurship and innovation, such as funding and mentorship opportunities, research and development grants, and the Startup SG initiative, which provides assistance to startups in areas such as financing, talent, and intellectual property. However, Singapore's beneficial government policies have given rise to pressing issues, particularly in relation to money laundering. As other banking havens known for their discretion and low taxes, such as Switzerland, have cracked down on anonymous bank accounts and other loopholes that allowed widespread money laundering, Singapore's reputation as a home for quiet money has spread. The city-state's lax regulations and strict bank secrecy laws have made it an attractive location for those seeking to launder and hide their ill-gotten gains. The One Malaysia Development Berhad 1MDB scandal is a notable example of how Singapore's financial apparatus can be exploited for money laundering. As former Prime Minister Lee Hsien Loong once said, "Singapore takes its reputation as a clean and honest financial center seriously, and we will not tolerate abuse of our financial system." With this in mind, let us hope that Singapore won't turn a blind eye to the past mistakes and take the necessary steps to strengthen their regulatory framework and prevent such scandals from happening again in the future. If you like this video, you should watch our previous video about the Quad, a mini NATO menace